Hello and welcome back to the Microlearning Institute. In this tutorial we look at a question called Mitchell, and in this question we're asked to calculate the total movement in the consolidated reserves to be shown in the notes to the accounts of Mitchell for the year ended the 31st of December X5. Now here's a quick overview of the information that we're given in the question. We're told that the net assets on the 31st of the 12th X4 for Mitchell, measured in dollars, was $50,629,000, and for its overseas subsidiary Lausanne, measured in Swiss francs, was 15,940,000 Swiss francs. We're also told that in the period year ending 31st of December X5, Mitchell made a profit of $2.45 million, where Lausanne made a profit of 175,500 Swiss francs. We're also told that Mitchell paid a dividend of $500,000 in the period. Now we know that the consolidated reserves are going to have to be adjusted for any movement on the translation of the net assets. And of course the translation of the net assets refers to Lausanne's net assets being translated from Swiss francs to dollars. Now we see that for Lausanne on the 31st of the 12th X4, the net assets of Lausanne measured in Swiss francs are 15,940,000 Swiss francs. Lausanne made a profit of 175,500 Swiss francs in the period. So consequently, the closing net assets of Lausanne, measured at the 31st of the 12th X5, are 16,115,500 Swiss francs. Now, of course, all of these elements are measured in Swiss francs, so we need to translate these to the reporting currency of dollars. The net assets are translated at the opening rate. Now we're told that the exchange rate from Swiss francs to dollars on the 31st of December X4 is 1.7. So consequently the net assets of Lausanne translate to $9,376,000. We're told that the average rate for the year is $1.55, so consequently the profit in Swiss francs of Lausanne translates to $113,000. So consequently we expect that the closing net assets should translate to the sum of 9.376 million plus 113,000, which is $9,489,000. However, when we translate the closing net assets in Swiss francs of Lausanne of 16,115,500 at the closing rate of 1.5 at December 20x5, that actually translates to $10,744,000. So consequently we see we have an exchange gain, that being the difference between what we expected at $9,489,000 and what we actually translated to at $10,744,000. So that exchange gain is $1,255,000. Now into group reserves we will take the group share of that exchange gain, which of course is just over $1 million. So now we can move to calculate what is the movement in reserves for the period, the movement in consolidated reserves. So consolidated reserves, firstly, are augmented by the profit after tax of the holding company, which is Mitchell. Now that's $2.45 million. Less, of course, the dividend that was paid out of that profit of $500,000. And of course, we add here the group share of the profit after tax in Lausanne. That, of course, was 80% of the 175,500 Swiss francs exchanged at the average rate of 1.55, giving us group share. We also add the group share of the exchange gain on net asset translation that we've just calculated from the previous working. So consequently, the total movement in consolidated reserves in the consolidated statement of financial position of the Mitchell Group for this period is $3,044,000. Thank you very much for watching this short tutorial from the Micro Learning Institute.